Well, welcome to this week's Mortgage Minute, and what a week it's been. I'm going to start with some amazing headlines. A 40-day free fall. As the price of oil drops, so too does the stock market. This one's certain uncertainty. It was interesting as global markets plunge as a wild week of volatility continues, and there's no end in sight. My personal favorite was, "This is what fear looks like." Global markets plunge before bouncing back as investors seek safer place for their money. Safer place for the money. So where are they going to? They're going to tangibles. They're going back to gold and real estate. Real estate is absolutely one of the safest harbors that people are going to. That's why one of the reasons I'm very excited about our mortgage fund this week actually gained and performed above average. And I look at Rob Carrick talking about the balanced approach being the most. If you have stocks and bonds, what's the best approach? Well, here's one where he's interviewed about 10 different investment industry experts, and they talked about, regardless of what's happening in the markets this week, if you take a long-term approach, a balanced portfolio should kick out. And this was interesting. They said the estimate of 10-year analyzed returns for a balanced portfolio should be between 4 and 6%. 4 and 6%, that's interesting. That is before fees, so watch the fees there. What is your after-fee return? Again, our mortgage fund that I've been talking about for a while is producing 5 to 6% return after fees. So right in line with what the experts are predicting should be your 10-year returns. So I look at all this and I say, what are the safe harbors? What does all this mean? Well, I think it's time to bring perspective to the market. If you're buying stocks, bonds, and mutual fund, or if you're buying real estate, take a long-term approach. The dips and valleys, the ups and downs, the in-betweens aren't as important if you are focusing on the fundamentals. So what's my message today? Honestly, right now, more than ever before, I look at headlines like this where Moody says Canada should be concerned about their housing debt, yet at the same time they're saying Canada's the strongest economy in the world. More than ever before, it's very easy to get caught up in the hype of the headlines, and I think it's important to take a step back and analyze what's important to you. Because regardless of what's happening globally and what's happening on the headlines, your personal numbers are unique to you. So what's best for you is your personal solution. You can't get that from headlines. So I'm encouraging you to take advantage of the free half-hour consultation we've been offering, and it's still on the table. If you'd like to book a consultation, I think it'll have a bigger impact now than ever before, and find out what's most important to you. So folks, that's the Mortgage Minute for this week, and I hope you have an awesome week, and we'll talk to you soon. Bye for now.